Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 12th, I believe. Yes, July 12th, 2022, and I'm coming to you for the second time for the weekly live stream. Welcome one and all. Today we're going to be talking about the case for reversal, okay? And as I'm reading this corrective price action that we've been in for the past 60 days, I'm going to make the case for why I think, and this is basically different from what I've been saying, different from what I've thought, that Bitcoin was going to go up a little bit and then go down a little more and consolidate for, maybe 20, 30 more days before finally breaking out in earnest, right? I'm going to make the case for why Bitcoin and alts will probably break out at the same time, though altcoins will more than likely run further than Bitcoin, right? They're going to make greater gains, and so that is what is going to drive Bitcoin dominance down, right? Bitcoin dominance is going to briefly go up, but as alts start to gain momentum to the upside, then dominance falls. So then that dominance chart that we've been looking at can make sense even in this scenario, right? So that's what I'm going to be talking about today. I'm basically going to go look over the technicals, what we have here on the 4-hourly time frame. I'm going to see why, I'm making the case for which, a reversal is likely in order, right now and not later. We don't know for sure, but I'm going to explain all of that. And then we're going to go down our watch list and over any other assets you guys want to check out. So definitely let me know if you're here, like the stream when you come in, and give me your recommendations. Let me know. All right, great. Just checking, and looks like we have a live stream. Okay, so you all know, if you're subscribed to the channel, that I specialize in Elliott wave theory. I'm a professional trader, and one of the things that I talk about the most on this channel, and maybe a direct result of where we've been in the markets, right? Basically, I started my YouTube, and I guess we've just been in a bear market for the majority of time that I've been going live, right? Let me get into the pen. Where's the pen? Hold up 1 second, guys. All right, here we go. All right, so for the longest time, we were here. Actually, no, I started my YouTube way before that. I started my YouTube in this trend, okay? And so basically, for chunks of time, we've been looking at consolidations. And so I made a good, concerted effort to really study consolidation, reversal patterns, right? Trying to see where we could find support and reverse the trend to go up, okay? So I basically poured over all these different manuals about Elliott wave theory, and then even went into detail where few people discuss AB bases and reversal patterns, consolidation patterns, and so this is kind of the backstory as to why this is such an interest of mine, and it's obviously an ongoing field of study. It's an ongoing process for me to really perfect this. One of the old one of my subscribers, one of the subscribers to this channel, somebody who's been subscribed for quite a long time, asked the question in my morning analysis. He asked, "Hey, very, very politely, good guy. You've been saying that." Oh, hold up, I gotta take this, guys. Talk amongst yourselves. 1 second. I'm sorry about that. I had to take that important call. All right, where were we? Okay, I was talking about reversal patterns and all that stuff. And yes, one of the reasons, okay, let me see. Hold up 1 second. Let me just get my bearings, get back on track, see where we're at. Hey, Samware, what's up? All right, guys, sorry about that. I had to take that important call. Now, reversal consolidation patterns. And let me just preface all of this in saying that this is advanced stuff, okay? Whether you're an advanced technician, a professional trader, or somebody who's just, has a casual interest in Bitcoin price action because you're invested, like, this is advanced stuff. Few people are talking about it. Few people go to this length of this length of sort of study or depth in analyzing price action, right? You don't hear about this much. Not everybody's a professional. Most people like to talk about kind of fundamental reasons, CPI, all that stuff. Like, I'm just strictly looking at charts and, really diving into the toolbox of that Elliott wave theory affords. All right, so if it's a little bit over your head sometime, just ask me to explain. I don't know everything, but this is definitely something I have a passion for and that I study incessantly. All right, and these reversal patterns are really cool because they're time frame agnostic, meaning you can see them on every single time frame, but they don't always work the same, okay? And so here in front of us on the 4-hourly time frame, I put two colors. I put blue and I put pink, right? And each color represents a degree of the consolidation reversal, okay? And just like I said this morning, I'm not going to repeat exactly. Any consolidation reversal requires any consolidation reversal requires at least 2 degrees. I've never seen a consolidation reversal not go into the second degree, but I've seen consolidation reversals go to the third or fourth degree, okay? And the reason, in short, that I think that Bitcoin has a chance to just blast off from here, and I didn't think that before, is because this right here, what we have are 2 degrees of consolidation reversal. Okay, what does that mean? Here in blue, I have an A wave and a B wave, okay? Every A wave needs an adjoining B wave, okay? That's your big A, big B. That's your first degree. It's done. And then here, very clearly, we have 3 waves up. That's a small A. And this is 3 waves down. It has to be 3 waves down. It cannot be, this right here cannot be part of an impulse, okay? I thought before we'd come down so far that this actually was impulsive and this all was one contiguous A wave. No longer can that be the case. And the reason being is that the retracement, let's clean this up, the retracement of this exceeds the 618, and you do not get impulsive price action with retracements beyond the 618 outside of your occasional very rare diagonal, okay? So, just to prove that to you, if you can't eyeball it, you go from the base of this wave, okay, to the top, and you see that we are at the 786. Okay, and I was discussing what Steve had said. He said, okay, yeah, I remember where I left off. Steve had asked, hey, he's an old subscriber, subscribed very early, and he said, you keep talking about this explosive move to the upside for Bitcoin and alts, but we just keep going down, okay? And I will actually argue that we haven't been just going down. for the past 60 days. Okay, this is a daily show. So if you're subscribed, you'll see, different titles, and you'll see me talking about different things. And I'll usually be talking about the anticipated big move. I always say big move. I'm not counting these little things here and there, either up or down, as big moves. I'm talking big trend-changing moves. And that is given the context of the larger analysis that we're in a larger sort of, we've experienced a massive downtrend for about a year. And I posit that the next big move take us out of this. And if I'm wrong, it's going to be a big move down. Neither has happened yet since about the 18th. Okay, we haven't really done anything. The 18th of June, rather. Okay, so it's about a month that we haven't really done anything. Now, in Bitcoin, on May 12th, where I thought this was definitely an orthodox low, it seems not to have been the case because we consolidated and we broke down. Okay, did not expect that. And that, I keep, revising my reads. That's a tough read. That's a tough read because you have your, this entire trend is an unlikely ending diagonal. You don't see that very often. You typically see those in wave 5s, not in waves C, but here you have it in a wave C. And it's tough to read and whatever. So I didn't have this as an orthodox low. However, if you go down the altcoin list, most altcoins have May 12th as an orthodox low. Not so the case in Bitcoin. So yeah, I don't believe that we've just been going down. Obviously, Bitcoin from May 12th, you consolidated, you did drop down quite a bit. Didn't see that coming. But in most assets in the crypto market, for about 60 days, since May 12th, you've been going sideways, effectively. You're some ups and some downs, but you've effectively been going sideways. So for the past 60 days, I've been accumulating like a madman, okay? And, to each his own, but I think it's silly to try and scout these moves. I rather consolidate all my capital and make buys in anticipation for the larger move. And that's the move that I keep saying I'm anticipating, I'm patiently waiting, whatever, for, because that's just the smarter move in terms of risk reward. If you do the larger time frame analysis, it just doesn't make sense to want to follow, even though this is a daily show. Once again, it doesn't make sense for me to come on here and say, I'm longing this, I'm shorting that, I'm longing this, I'm shorting that. No, that's a lot of effort, and it's highly, there's too much risk involved, at least for me, right? I can't successfully long and short these small moves without risking a lot of capital. Maybe some other traders can. I just can't. So I'm going to just accumulate once I find an orthodox low and my analysis shows that it's likely that the next big move, again, emphasis on big, the next big move is up. Okay, so to answer Steve's question, yeah, it is what it is. And a lot of people will probably unsubscribe, and a lot of people will get annoyed, but a lot of people don't trade well. And I'm still in most of my positions, even my leveraged positions, because I recognize that the larger move to be made is up. And even if I've been waiting 60 days for that to happen, I will wait the 60 days. And my trade is still good, even though some of them may be underwater a bit. My spot or leverage trades, soon, very soon, I will do very well on a number of trades because I did a large time frame analysis at a large time frame macro low. Do you see? That's the I've talked about this before, and I know it's repetitive, but just in case some people are wondering, That's my logic behind all of this. All right. So again, here we see the blue color and the pink color, and that represents 2 degrees of reversal consolidation. Basically, every time you make your initial break of structure, 3-wave move, it's corrective. You targeted wave 4 of the previous trend. Now you get a B wave, all right? That's 1 degree down. And then you do it again, right, for what I call the pivot. A small A, a small B, 2 degrees down. You know it's B because you targeted the 786 of this previous 3-wave structure, and you know that once you get into the 786 region, it's corrective. Okay, that is a corrective retracement. It's not an impulsive intra-wave sort of move. Okay, so that's 2 degrees of reversal consolidation that I have here. And as I started this stream in saying, you do not see, I've never ever seen any reversal consolidation on any time frame have less than 2 degrees of price action. Okay, now it's always a challenge and question, you know, how do you count those? Like, is this one whole B wave? I don't think so. I think that's a goofy looking B wave. It could be a flat, but I think the better read and the more likely read, again, it's all probabilistic, the more likely read is that that's one, this is entirely different, that's entirely different, but these two are married, that's 2 degrees, okay? And so the tricky bit about these reversal consolidation patterns is this. Although I know that I've never seen anything less than 2 degrees, it doesn't necessarily only have to have 2 degrees. I've seen 3 degrees and I've seen 4 degrees, and I'm going to show you that in a second in some of the altcoins in these watch lists. But you can have multiple degrees and still be in reversal consolidation. So that's the tricky bit, and that's also part of the issue of trying to say, it's done, we're going to go, right? Rather, you could say it's likely that we're going to go sometime soon, but it's, you know, I can't say for sure. So that's basically where I see with us with Bitcoin. Now, let's look more carefully at this right here, because I think that if this is true, and, well, even if this isn't true, and let's say we're still expecting another degree, a 3rd degree, and a 4th degree of reversal consolidation, because this is all recursive, the next move is still up, okay? But if this is finished and our 2 degrees exhaust our reversal consolidation of this trend, then the next move is going to be massive, and we're going to see the big volume, right? We're going to see volume. It's going to be a massive move. It's going to be incontrovertible. It's not going to be ambiguous. But if the next move is lukewarm, then we know it's still likely corrective, and we can anticipate kind of the same thing, right? Like a 3-wave move up and then a 3-wave move down. And that would be your 3rd degree. Okay? I wish other people were talking about this. I don't want to be the only one to talk about this because I want to learn more about it. And, you know, other than Ralph Nelson Elliott's manuscripts and my own work, you know, my pouring over price action, I don't really have much of anything to go off of. If anybody knows anybody else, authors, analysts discussing these reversal consolidation patterns, which Ralph Nelson Elliott calls the AB base, which Bob Prechter of Elliott Wave International says it was calls a mistake or an error, an overreach on behalf of Ralph Nelson Elliott, which I completely disagree with. If anybody knows anybody that's discussing this, please let me know, because I would love to, you know, go over their research, go over their findings. I think it's important, obviously, because as I said in 2 days ago, Elliott Wave charting and good technical analysis can basically be boiled down to recognizing consolidation reversal patterns. That's it. Like, that's literally your only job, because everybody knows an impulse when they see one, okay? Either up or down. And, you know, good luck trying to get in at a safe place during those impulses, right? You know, there are ways to do that, but you know, everybody wants to get in on the move before the move happens or at the beginning of the move, right? So your job as an analyst is to more or less try to ascertain where the next big move is going to be. Is it going to be up or down? Like, what's the next big move from here? Even if you don't get all the little bits and pieces and you don't know how many degrees of consolidation reversal you're going to get, whether it's intrawave or it's terminal, if you know the next big move, you're likely to win, or you're giving yourself a big chance at, you know, being successful at most any trade. Yeah. So, yeah. Let me check any questions or comments, whatever. And then I'm going to go down the watch list. And definitely let me know. Guys, if you're getting value, please like the stream. And let me know who's here, what you guys think about this work. And I'm just going to go down our usual watch list. But if you have any altcoins that you're looking at and you're, you know, curious about, definitely let me know in the comments. All right. So, yeah, before we leave Bitcoin, like I said, we're going to zoom in on this price action. We're going to try and find out when this wave, this trend, right? Obviously, it's a downtrend. It looks impulsive, right? But it looks impulsive as part of a corrective wave, a three-wave move. Okay, it's not, to me, it doesn't seem like pure impulse, okay? Although it could be. If it was, then, you know, the trend continues. But I don't think that's likely, okay? So we're going to have a look at this and see when it could possibly end, giving us some sort of insight as to when we can expect the next move up, whether it's a trend-changing move up or another corrective move up, okay? So let's jump down into a smaller time frame to do that. Let's go down to the hourly time frame, and let's turn on one of our indicators, our stochastic RSI indicator, okay? Our momentum indicator. And one of the reasons you want to turn on the momentum indicator is because it will show you some divergences, and we can try and use divergences to see what's a likely next move, okay? So I'm looking at right here. I think the trend, the downtrend starts here. I think, as I labeled it, you have a three-wave move down here, okay? And then you have another three-wave move up here. And this is your impulse, okay? So this is my A wave, this is my B wave, and this is my C wave. The first thing I want to do is I want to take my Fibonacci extension tool and see if I'm hitting any key levels on this. So I would say my 1, 2, 3, 4, 5. I would say yes. My A wave ends here. That's my orthodox low. My B wave ends here. That's my orthodox high for my B wave. Okay, and so I see the 2236 hit, which is a pretty far extension for a typical, for a C wave extension of, I would say that's on the extended side, right? For a three-wave move. I'd say that's on the extended side, because you typically get a 1618 extension or a 1 to 1236 extension for these C waves, right? 2236 is extended, okay? So that's the first thing I'll say. Next, if I'm trying to break this down and just do a wave count right here of this price action, I'm gonna start by saying I think my wave 2, my wave 2 is up here. I'd say my wave 2 is up here. Okay. And then this is noteworthy to me right here. this has got to be kind of like an important correction, like a wave 4 or something like that. And I would say all of this is an extension right here from here on out. Yeah? So I'd say 1, 2, 3, 4, 5. I'd say that's my extension. Okay, so let's just count that out. Okay. And right here, I would say it's like this. 1, 2, 3, 4, and I'd say 5 ends over here. Okay? It's possible. I'd say 5 ends over here. That's my sense. Yeah? That's my sense. Now, I do have some sort of capitulative volume candle here. It's not massive. This is obviously bigger, so 5 could end here, but you know, it's around here somewhere. It's likely around here somewhere. My first instinct is to say that this is the end of 5, okay? So now let's see if that makes sense. Let's turn the lines on just to see more clearly. And then what we're going to do, last thing we're going to do on this is see if we can't corroborate this count with some Fibonacci extension. Okay, so I'm going to take the length of wave 1, retracement of wave 2, and see that my wave 3 actually ends close to, if not at, the 1618 to 2 region. Okay, and so that is likely to be a wave 4, because wave 3 in a regular 53535 extension ends between 1618 and 2 Fibonacci extension. So that's likely. And then this is likely to be an extension, and that would make sense as to why the Fibonacci extension of A, retracement of B, gives such a long C wave of 2.236, where you would expect something like 1.618 or even 1 to 1236, right? So everything kind of fits. Okay, you saw how I did this. I didn't do this beforehand. I hadn't done this before. I didn't do this morning, but everything kind of fits, saying that this is likely the end, if not close to the end. Okay, now let's look at my momentum indicator and see if we can't get any indication. Let's start off by looking at the 4-hourly time frame momentum indicator. Okay, so one thing I like about the 4-hourly time frame, but you know, I don't know how useful it is that it's bottomed out. But it's been bottomed out for quite some time. It's been bottomed out for 3 days now. 3 days now we've been oversold on the 4-hourly time frame. So whatever that means, but I think the 1-hourly time frame is a little more interesting. It's a little more interesting because it's giving us, I really like this capitulative volume candle. Okay, if it's wave 3 and we get a volume candle, then I know it's the end of wave 3, and we typically expect big volume at the end of wave 3 because wave 3 tends to be the biggest, the most impulsive of the waves. However, in this case, when you have an extended wave 5, which, let's see if it's 1618 of wave 1 through 3. Okay, look. If we take waves 1 through 3, retracement of wave 4, 19020 would be the end of wave 5. Okay? So typically, if you have an extended wave 5, your wave, or if you have a leading diagonal in waves 1 through 4, whatever, waves 1 through 3, you're making a leading diagonal, You take waves 1 through 3, retracement of wave 4, and the 1618 is going to project wave 5. Okay, that's not a rule. It's not a law or anything like that. It's just a guideline. Okay, we're close to the 1618. Okay, so this will also indicate to me that if we haven't finished, then we're close. Okay, but as I said, I do like this volume candle right here as a capitulative end. Because I think that we ended over here, I think that this is part of your consolidation reversal right here. This right here. This is and let's zoom into that in a second, but I'm going to show you. But before that, I just want to point out my bullish divergence on this hourly time frame, okay? As you can see, we're clearly making lower lows in price action, right? And at that same point on the stochastic RSI momentum indicator, we're making higher highs, okay? So lower lows in price action, higher highs on momentum, okay? And so for me, that indicates that the next move, the next move is likely to be up and out. Okay, that's another corroboration. Obviously, it doesn't always play out when you have bullish divergence, but that's just another sort of piece of the puzzle, if you will. All right, now let's zoom into this, and I'm gonna take the lines off. Guys, if you're getting value, please like, share, and subscribe. Definitely let me know your thoughts on the analysis. Some people, they don't know much about analysis, or they get a little lazy and they expect me to just say price is going up, price is going down. If you come and you follow any YouTuber and you're kind of serious about technical analysis, or you want to learn, you really should pay attention to the quality of analysis, the substance of the analysis, not only the conclusions, because you can derive erroneous conclusions from still solid analysis. If the analysis is solid, you could still interpret it poorly or erroneously, but it doesn't necessarily mean that it was bad analysis, and vice versa. But I think what really matters, and why this is an educational channel first and foremost, what really matters is the content, the analysis, the quality of analysis, not necessarily the conclusions, right? So yeah, we have bullish divergence on the hourly stochastic RSI. We used a bunch of Fibonacci extension tools. We tried to count the 5 waves. It looks like it's finished or close to finished. We like this capitulative volume candle, and I think that this capitulative volume candle is part of a consolidation reversal. Again, your consolidation reversals can be perceived on any and every time frame. It's time frame agnostic, okay? So we're going to do the same thing as we've been doing, right? And we're going to analyze the consolidation reversal pattern for this trend. It's the same thing that we're doing in, the larger trend, except this is for a smaller time frame, right? So you have a big trend, it's going down, it's going up, it doesn't matter, and you're trying to figure out when it ends, okay? So the first thing you do, obviously, is all the stuff that we just did now. You try to count the waves, try to use, math, Fibonacci levels to get your bearings. You try to, ascertain if you're dealing with a regular 53535, an extended wave, which wave was extended, why is it likely to be extended. Maybe use some indicators to corroborate, momentum indicator, some volume, whatever. And then, you're just putting the pieces of the puzzle together. This never means 100%. It's not a crystal ball. You're just putting together pieces of the puzzle, okay? Again, value of the analysis is in that process, not necessarily the conclusion. People who jump to the conclusion and then they complain, I can't help you, right? Nobody has the 100% right answer, even if their conclusion is correct, because you got to go through the analysis, and the analysis is not always interpreted correctly. Yeah? So anyway, here I see 1 degree of reversal consolidation. Do you see that? So here I see this being an A wave, my big A. This is my big B. This is my typical B wave retracement, where you have a flat correction to the big A. What I then anticipate, given my analysis, what I anticipate, not my crystal ball, whether it's right or wrong is irrelevant. You make your own decisions. You push the buy button or the sell button. You make your own decisions. I'm just giving you my analysis and sharing it, and that's basically how I'm making my decisions. I'm looking to see another degree, at least 1 more degree of consolidation reversal. So I need a 3-wave move up. And again, your small A, or your pivot A, as I've been calling it on the channel for a while now, sometimes is small, right? Sometimes it's tiny like this. Sometimes it's bigger than what I call the big A, okay? So I'm looking for another move up and then another move down, because you always need a complement of that A wave before a move up, okay? And that move up, again, can be the trend change move up or another degree of the larger consolidation reversal, okay? So that's my small time frame analysis as to what I think's going on and why I think it's happening. Guys, if you're getting value, please like, share, and subscribe. And let me know if you have any questions, if you want me to look at anything. In a moment, we're going to jump into the watch list, and we're going to have a look at the other alts. Okay, Samware, have you any knowledge about the psychology behind each wave? That would be interesting. Yes, absolutely. Samware, I recommend that you have a look at, if you're just starting, check out the book Elliott Waves Made Simple. Okay, there's some analysis behind that, and I'm going to go over it just really briefly, and I've mentioned it before. First wave, very few catch it, because it's the, in order to catch the first wave, you have to have the expertise to be able to read the analysis or the consolidation reversal, right? You have to be able to read the corrective patterns, and that's, the most challenging. So very few people catch the first wave of a trend, okay? And so the first wave goes, and most people don't know that the new trend has started, okay? So most people sell off the first wave. That's why the second wave tends to sell off to about 0.618 of the first wave, okay? So 3 steps forward, 2 steps back. Literally 2 out of 3 people that participate in that first rally sell into strength, meaning they sell the top of wave 1 or close to the top of wave 1 because they don't believe that a new trend has started. That's wave 2, and it's usually sharp. You typically get a zigzag. Wave 3 starts going, and once it starts establishing itself, most people buy into the idea that the new trend has taken hold and the market is going, okay? So a lot of savvy investors get in only at wave 3. And there's a whole swath of Elliottians, good, successful analysts and traders that only trade wave 3. Reason being, they see trying to read consolidation reversals and corrective waves as a losing effort, as an effort in futility, like, there's too much risk, right? And so their whole trading strategy revolves around only participating or getting involved once wave 3 starts. Okay, so wave 3 typically is the longest and the most impulsive wave. So a lot of analysts, like I said, traders, get into wave 3 and they ride wave 3. Wave 3 goes, and towards the end of wave 3, the average, typical, non-savvy retail investor starts getting in, okay? And once they get into wave 3, the savvier investors that got in at the beginning of wave 3 or that at the beginning of wave 1, they sell off, take some profit. This is why wave 4 is typically shallow. Wave 4 is a typically shallow retracement, only between the 0.236 and the 0.382. So basically 23.6 to 38.2% of wave 3's impulse, okay? So they take profit and they're like, ooh, we got in early. We're not going to wait too long to take some profit, right? So that's wave 4. And wave 4 typically takes a while to retrace because a lot of people are taking profit and a lot of people are buying in. And so there's kind of like a stalemate. And so your retracement in wave 4 tends to be a complex, tends to the triangle retracements. It's just complex. It's not a fast it's not a fast retracement. It's shallow and slow typically, okay? And then wave 5, basically everybody's grandma, the least savvy investors get in at wave 5, which is the culmination of a trend. And that's when the savviest investors are looking to sell. They're selling the beginning, the middle, and the end of wave 5. They're just, basically wave 5 is a divestiture of positions for them. They're not ever thinking of buying in wave 5. But the less, like I said, the least savvy are in wave 5, and not only are they in wave 5, but they're thinking this is the way money is made. It's easy. Investing's not so bad. Look at it go. And actually, this is why you see sometimes the highest volume spikes in wave 5, not wave 3. You'll get a volume spike in wave 3, but you'll also get a strong volume spike in wave 5 because everybody's in, the trend's been established, and that is the wave, the wave cycle, or that's the impulse, okay? And then there's some fundamental kind of explanations in as for retracements, but retracements are a bit more complicated because you can have flat retracements, you have zigzag retracements, you have complex retracements. So I'm not going to go into that, but that's essentially it. So yeah, all right. So Wyckoff, nice hash login, says Wyckoff accumulation. Yeah, it's all the same thing. You're just looking at it through a different lens, and I've discussed Wyckoff accumulation before on this channel, and we can have a quick look, but you can see the kind of like here, let's pull up. This is exactly the schematic that you see. So yeah, this would be my Wyckoff accumulation schematic, and there are 2 for accumulation and 2 for distribution. I think this one would have the spring, right? Let's see. Let's actually go to the, if people don't know where to find this, I think the wiki is the best place. Let's see. I don't know why I'm in images. So typically when I go and if you've never read about this, the Investopedia article is actually pretty good as well. If you've never read about Wyckoff and you're interested in trading, you should read a little bit about it, even if that's not your main trading style or main trading tool. Yeah, this is new. They've increased it, or they've added to this article. This wasn't there before. Let's see. Anyway, this here, I think the stock charts is the one I typically reference. Yeah, this is the one I typically reference. Okay, yeah, these are useful. These are all useful, and I mean, I think just to be a well-rounded trader and analyst, I think you should know a bit about Dow theory. You should know a bit about Wyckoff, You should know some Merrill, maybe. Know a bit, of Elliott wave, I think, and classical charting, right? If you want to be well rounded, I think. But at the end of the day, it doesn't hurt to specialize, because if you find some affinity in any one system, you're probably going to be better off rather than trying to change your system every 2 seconds, or knowing a little bit of this and that and not really knowing anything very well. I just think Elliott wave is so complete on various time frames. It offers some really nice perspective on the larger time frame, and you could see it on the smaller time frame because it's time frame agnostic and all that stuff. Anyway, so yeah, Wyckoff gives you this, and I think the accumulation schematic 1 is most relevant. The second one is kind of the same, except you don't have the spring. Okay. So I think if you look at what we're doing here, maybe this is the one without the spring, actually. Yeah, this is number 2. This is number 2, I think. Right? Look at that. It's uncanny. This is uncanny. You guys want to do a split screen? Let's do a split screen. Okay. Let's do a split screen. If I can find the other screen. Here we go. Okay. And let's click on this. Actually, let's click right here. How do I do this? Let me just open this right here. Yeah, that's uncanny. Here, let's get a little more real estate. Should look at that. That's awesome. Yeah, I think this is number 2. Except, so this part right here, we go up, and obviously these are schematics, so it doesn't have to follow exactly. It just has to, sort of mimic the principles, right? It's like there are principles. I forget what everything stands for, but I think this is automatic rally, right? Basically, what I call the initial break of structure, your A wave, right? And if it comes up here, it usually comes to wave 4 of the previous trend. I think that's basically what Wyckoff is saying, and you're forming this channel here on the larger time frame, right? Just like we always talk about. Where's my pen? Oh, here it is. You're forming this channel, and that's what basically Wyckoff is saying. You have an accumulation and consolidation of the asset, and it's essentially for the composite man to ascertain if selling has been exhausted, right? If it's accumulation, right? And so I, like smart money, I've been buying, during the course of this accumulation, because I recognize it as an accumulative, consolidative pattern, right? And in Wyckoff analysis, people would see the same thing. And then the ST, I know, is a secondary test, okay? So you're basically testing the bottom range of your channel. And every test is a test of, are sellers still here? Are people still interested in selling this? And then every time you test that and you get a rally, that shows that selling is exhausted. And so you keep testing. Anybody else want to sell at this price? Okay, no, people step in to buy, and it marks up, okay? And so I think actually, on second thought, this looks more like the first accumulation schematic, and this would be the last, the spring. This would be a spring, because yeah, I initially thought that this was my last point of supply, and then this was my sign of strength, okay, and then that we were going to rally up and out from here, but into, making this one big corrective wave. But given this, and just, this is why I titled this morning's update as everything's changed. This changes everything, because this makes it, right, according to Wyckoff, a spring, basically a last test of supply before the markup, okay? So last point of supply here, but let's go on to accumulation schematic number 1 and see what that means specifically. So let's see here. So number 1 has your spring. This is distribution up here. Okay, so here we go. All right, let's open that up. Let's close this. Let's open this up. Guys, if you're getting value, please like, share, and subscribe. Okay, so yeah, I think this one is more apt. This is a better approximation of what we're dealing with, actually, right? But yeah, Wyckoff's awesome, and I love technical analysis. I love charting. I love good analysis, and I think Wyckoff is great. Gann's also good. Gann's a bit abstruse. It's a bit it's tough. Gann is very, very, how could I say it? It's not as accessible, right? Gann method, you can have success with any good method, but Gann it takes a lot of doing, just like any good system, but Gann's not as clear in terms of its explanation and its application. But yeah, study a little bit of Gann, see what you like, right? I think the whole point is find something you like and really, really learn it, right? Learn it up and down, left and right, and then apply it. Okay, so here, I think here's your spring right here. I think this is the spring. We basically came down to test one last time the supply of Bitcoin on exchange, and if anybody was still willing to sell here, right? And so if people are still willing to sell, it's going to move down, but it's unlikely that it moves down. And if people are buying at this low, it's just going to mark up with the last point of supply and a sign of strength. And, we're going to get our consolidation at the top of this range and then move up, break up and out of this. So yeah, thanks for sharing that nice hash, I believe it was. Let's see. Yeah, it was nice hash login. Thanks for bringing up Wyckoff, because I bring Wyckoff up from time to time, but, I probably should do it more often than not, because, especially when you're talking about accumulation, reversal patterns and consolidation, all that stuff, like, I think that's where really Wyckoff is powerful. Wyckoff is very powerful in those contexts. Okay, so so we did Bitcoin, and we established the case for why it's likely that this trend is done, okay? If not done, then close to finished, and that the next move is going to be up, although we're not sure if this next move is going to be another degree of our consolidation reversal pattern or a move up and out, okay? Now, let's go into altcoins. Where I think we can assume quite safely that the next move up is a move up and out. Okay, so that also may be a thing. Okay, if Bitcoin decides to put in 3 waves up, okay, not a bona fide impulse up, and then another 3 waves down, I think it's very likely that most altcoins are just going to be in their impulsive moves up, and I'm going to tell you why. So let's start with Cardano. First thing I want to say about Cardano, look at this motherfucker right here. This is the textbook definition of what Bob Prechter put in, I think, chapter 3, when he said, it's, I think, in the section of wave extensions, and there's a small section that says count undetermined, because it literally is just like, it looks like that. It's like, it's beautiful. It looks very, pleasing to the eye, but, it's hard to make heads or tails of this, and where wave 1 ends, and I think wave 1 ends here, and wave 2 goes here, but where does wave 3 end? Where does wave 4 begin, and all that stuff? Fuck if I know. That's exactly what's in the book. It looks just that ridiculous, but in schematic form. But I don't know if you can find a nicer looking wave that's as regular. That's just one of the most regular waves I've ever seen in my life. Okay, now here's why I think, regardless of what Bitcoin does on the next move up, the next move for altcoins is gonna be, more likely than not, the big move, up and out, okay? And this is the reason. Number 1, here you can clearly see, and let's go on the 4 hourly time frame, right? Here you can clearly see that we're on large time frame support, okay? Anybody, any novice analyst, chartist, trader can tell you, just looking at basic support and resistance, you draw your 2 lines. This is your resistance. This is the top of your channel. That's been established. And this is the bottom of the channel. And I didn't draw those lines straight, and there's no reason I have to do that, because we're not using pen and paper, so I could just use these tools in this this software. So I'm gonna do that instead. So you look and you see, okay, this is clearly at support. We're at support in Cardano. That's the first thing. And if you look at most other altcoins, you'll see you're on support as well. Okay? That's the first thing that tells you, okay, it's likely that the next move is up, and it's likely that this move right here, this 3-wave move, is finished or close to finished. Okay? That's the first thing. Second thing is, let's break this down really quickly using our understanding of reversal consolidation patterns. All right? That's a big A. That's a big B. It's almost, I mean, once it prints, while it's printing, it's hard to see, yeah? But once it prints, that's real easy to tell, I think, okay? Now, having established big A, big B, what do you make of this? I see 3 waves here, 1, 2, 3. I'll say this is small a, and I see 3 waves here. I'll say this is small b. This is degree 2. This is degree 1, okay? Degree 1. Actually, let's clean this up. Let's just do this right here. That's my 1. That's my 2. I don't think that's a stretch to say that this is a flat correction right there, okay? And now, you know, I got excited when I started reading this. I was like, ooh, we're on support, and we put in 2 degrees. We're off to the races. But again, you need a minimum of 2 degrees, but who's to say that you're only going to get 2 degrees? That's why it's a recursive pattern. I keep saying it's an AB recursive base. You don't only get 2 degrees. Sometimes you get more. And Ralph Nelson Elliott in the Secret of the Universe there's another name for that book. In that treatise, he only referred to the first degree. Actually, he didn't talk about this extensively, but I think he was using pen and paper and charts. He didn't have like small time frames, access to small time frames. At least I don't think he did. So he only perceived the first degree of this AB base that he called it. But with our software and technology, it's easy for us to see that this basically can go on and on and on and on. And we can see here very clearly that although this is the end of degree number 2, let's move this bracket right here so we can see more clearly. This is clearly another degree right here. This is, let's call it alpha, and these 3 waves would be beta, okay? So this is degree number 3 for me, okay? So I see, and I just, because we do Elliott wave theory and we talk about degrees when we're talking about wave counts and stuff like that. So I think it makes sense. I just adopted the whole designation of degrees when you're looking at these, and I think that makes sense, right? And let me know if it doesn't. But see, I see 3 degrees here. Is it going to stop? Are we going to get another one? We could, but it's likely to be all she wrote because I have 3 degrees. That's why I think altcoins like Cardano, like other altcoins that have 2 or more degrees already printed, are likely to have exhausted this whole idea of testing the base of this consolidation reversal pattern for more sellers, okay? Just like what we saw in Bitcoin's Wyckoff accumulation. It's the same idea. You're testing to see, the composite man, according to Wyckoff, is testing to see if any sellers are still present. And the reason that is in Wyckoff is that you don't want to buy a lot of shares if you're, a big buyer, right? If you're a whale or a composite man, like somebody who moves the markets, right? A market maker doesn't want to move the markets before all the sellers are exhausted, because if they spend a lot of money and then everybody starts selling, they've lost their money. They've lost their investment. And then other people can buy it for cheap, and they basically are out this amount of money, right? They're out this amount of money because instead of buying over here, they could have bought over, how do I say this? They bought with the intention of the price going up, not down. Okay, that's the simplest way I can put that. And if the price goes down, meaning there are more sellers, then they messed up. They need to make sure nobody else is selling after they buy. That's the easiest way I can put it, okay? And that's why I think it's likely, that's why I think you're getting all of the, like, recursive number, or that's why you get more than 2 degrees sometimes, because you can have, just like in Wyckoff theory, and I'm putting this together now, real time, you don't always get, I erased it, but, here, let me just show you again. Oh, actually, I'm goofy. I have the schematics, don't I? Here we go. I'm just going to show you this, because I did study Wyckoff for a bit. I read quite a bit about the system and the idea. You don't always get only one secondary test. Where's my pen? Where's my pen? Here. Okay, here we go. Markup. You don't always get only one secondary test and one spring. You can get multiple springs and multiple tests. Okay? This schematic just shows one right here. But even here, you can get multiple secondary tests. You can multiple secondary tests in phase A and phase B, as well as phase C. You can get multiple springs, although you typically get one spring. But you can get multiple tests. And that again, is basically the same idea that I've just explained in this accumulation reversal pattern that I'm putting together using Elliott wave theory. The idea of how many degrees do you get and when are you going to take off is unknown. I think you, just like in Wyckoff, you need a minimum of 2, right? You need a secondary test and then a spring or some last point of supply, right? That's 2 tests of the base. That's 2 tests to exhaust the last bit of sellers, but you can get more. And so that's what we're seeing. And I think that we've exhausted it with 3 degrees in Cardano, with here in Dodo, I'd say this is my big A, this is my big B, that's 1 degree. I'd say this is my small a, my small b, that's 2 degrees. And this is my smaller a, and this right here, let's see, I'm going to have to zoom in for here. Okay, let's just keep that in mind. We're on degree 3. We just finished the second degree right here. Okay, so I'm going to zoom in to the hourly time frame for the third degree. Okay, and so this is my case, not just for Bitcoin, but for all coins, for reversal. Okay, the fact that we've been in reversal consolidation for 60 plus days and we've put in more than 2 degrees. That's basically the nuts and bolts of my case. Okay, so this is degree 3 that I'm showing, right? So this was my demarcation for degree 2. This is degree 3. That's my A. Okay, 3-wave structure up. Now I need a 3-wave structure down. Actually, to be honest with you, I think here it's more like this. Okay, and I'll show you why I think it's like this. Because if you take your Fibonacci retracement of this alpha, right, this third degree AB base, you'll see that you basically put in a zigzag. And what's a zigzag? Those of you subscribed to the channel will know. A zigzag is where the 3-wave B wave retracement retraces between the 0.5 and the 618 of your A wave. So I'm going to show you that again, minus all of the noise. Here's my alpha and beta. Okay, again, I don't know for sure. This is just probabilistically what I think is going on. Okay, if I take my, whoops, that's not where I want to pull it from. If I take the base of this move, which would be actually here. No, it'd be here. I think it's here. Something like that. It's approximate, maybe. Boom. Did I do that right? Oh no, sorry. I lost my bearings. Here is the third degree, right? Third degree starts there. Okay, so do you see that? I would say you got some sort of corrective impulsive wave up here. Maybe it's even come down. Yeah, I would say it's something like this, okay? This is your 5-wave move. Don't ask me to count it, but something like that, okay? And then you get a 3-wave move between the 0.5 and the 618, okay? That's your zigzag. The next move is up and out, 5 more waves, okay? That's likely, given the retracement of this B wave, okay? And again, this dodo is in the third degree, right? Counting from May 12th, that's 3 degrees, very, very distinct, clear A waves and B waves, right? Just down the line, you can see how you've gotten at least 2 degrees on all of these, okay? And I'm going to show you something with Kadena. I'm going to go on log, okay? and I've shown you this before, but this is one of those. Let's stay on auto for a second. This is one of those assets that. Okay, I need to go in higher time frame just to show you this. Oh, it's thundering here. Okay, this is one of those assets that has clearly done what I explained in my fundamental explanation of waves, wave 2 retracement. Okay, so if you look, let's see. Okay, if you look at this as being a 5-wave move up, right, in Kadena, this was basically a lot of percentage points in a short amount of time, relatively short amount of time. I think it was 100 days or something like that, 3 months or so. And I mean, the thing went from 30 cents to $27, okay? Had people kind of questioning everything about proof of stake and everything else, right? Just based off this price action. And then you get a sharp retracement. Why? The trend was just newly established. Nobody believed in it. People sold into strength. Okay, it's not a bad thing. It's just that's what investors, speculators, traders do. They sell into strength. You've gotten such a high return on your investment, right? You sell into strength and look at your retracement. It's 61.8% of your prevailing trend. You're at the 618, right? And this is why people even waste time, or not waste time, but people like myself, spend so much time doing technical analysis, doing, studying Elliott wave theory, because you see this over and over and over again. It's consistent. And so it gives you an edge in the market, right? So you have 61.8% retracement of this first wave, okay? That's your first thing. I've said this before, but you have a mathematical base for this price, okay? You've hit it once, twice, 3 times, 4 times. You've tested this bottom, okay? So that's the second thing. Now, zooming in on the smaller time frames, I'm going to get rid of my Fibonacci retracement tool. Okay, zooming in, just so you guys get the larger time frame context. Zooming in, you'll see that you formed a range since May 12th, right? Just like most of our assets, you hit that orthodox low on May 12th. You had an automatic rally or initial break of structure, targeting wave 4 of the previous trend. That's what you got. And then a retest of your base, okay? So this, once again, is your big A, that's your 3-wave structure, big B, 3-wave structure down, okay? So that's 1 degree. You then have clearly 3 waves up here, okay? That's your small a. And then you have a, what would you call that? You would call that it's a flat correction, okay? It's just, it looks more dramatic than it is, but it's a regular flat correction, okay? And this is just, the B wave of this small A wave, okay? So you have small a, small b right here. Small b is like this, okay? So that's the 2nd degree. This, once again, your 3rd degree. This, you're in your 3rd degree. So, question is, what comes next? Do you break the trend, the downtrend, and resume your natural uptrend? Because the larger trend is the uptrend. We've been in the downtrend for quite some time, but remember, if you go back and look at this on a larger time frame, your larger trend, your dominant trend is up. You've come down, yes, 61.8% of your move up, but you're in an uptrend. You have not retraced more than 100% of your uptrend, okay? You only actually retrace to the golden mean. So once you start moving again, expect and anticipate to move with some alacrity, some impulse, right? Just like you did when you first established the trend. So that's the idea. And this is why I can be so patient and wait 60 or so some odd days and accumulate my position here, because I'm reading this on a large time frame and I know it's likely, probabilistic, that the next move, the next big move, once again, emphasis on big, I don't give a damn about a 5% move, a 10% move. Like, yeah, I can trade those and over time I can accumulate some wins, but if I want to make my life a little easier, I'm just going to buy on spot and build a large position at this base and wait for the larger move to play out, okay? And so this is another reason I see 3 AB bases. So I see 3 different degrees of AB basing, and I'm at the golden mean. So I think the next time Cadena moves up, it will be explosive. I hope that makes sense to people who are confused as to why the past 60 days I've been pretty much saying, okay, that's what I'm looking for. Like, I'm looking for it. I'm like, obviously I'm looking at what the market does and I'm reacting, but at the same time I'm anticipating a large move. The next large move I anticipate is up and out, not necessarily down. Okay, I'm just gonna pause for a second and have a look at any comments. And definitely don't forget to like up the stream, subscribe if you're not yet subscribed, and let me know if there's anything you want to look at. We're just going to go down the watch list, okay? But this is basically, once again, my case for why the next big move is up, as I've been saying, and I think the case for reversal basically is imminent, right? I know I've been saying that for quite some time, but in the scheme of things, what's 60 days when, you've been in a 400-day downtrend? All right, so next on the list is Litecoin. All right, Litecoin. So much like the other assets, you can see, actually, this is not the, I'm not going to look at the larger chart for Litecoin. We're just going to focus on this consolidation reversal that we've gotten in the past 60 days. Okay, I've already talked about how Litecoin is essentially in a leading diagonal, and it's been in one ever since it started trading on the open market. And so its fifth wave should be extended and should be super impulsive. Okay, so that's fun. But yeah, let's just focus on this and see how many degrees of AB basing we have, right? Once again, May 12th was your orthodox low. You put in a very nice, strong wick to the downside, okay? That's your automatic reaction in Wyckoff terms. Targeted wave 4 of the previous trend. And then you went on to put in these consolidation reversal patterns. So that is very clearly right here. Let's go on the 4-hourly time frame. Okay, right here. So this is very clearly your, actually, you know what? Yeah, right here. I'd say it's goofy looking, but this is your 3-wave structure, your A wave, okay? I'd say that this is 1, 2, 3, your V wave, okay? You're not creating, although you're creating a lower low, it's within the 1618 Fibonacci retracement of this. So this wave B, although it seems, like you're basically in impulse and you're making a new impulsive low, you're making a lower low, granted, but it's not outside of a viable reversal pattern, because the retracement, I'm just going to show you right here. And this is unlike in Bitcoin, unlike in Ethereum, okay? if you take the bottom of this A wave and the top of this A wave right here, orthodox top, you can see that this B wave just ended at or right before the 1618. I should get off of log actually. Okay. I should be on an arithmetic scale, but you can see it ended before the 1618, right? Of this A wave. So this is still likely, probably, just one contiguous channel that you're dealing with, okay? Although you dipped below the channel, which is, this happens sometimes, right? The spring sometimes dips below the channel. We know that in studying Wyckoff, okay? So that's your big A, big B. This is your first degree, okay? This is clearly, right here, your second degree. Actually, I think your second degree ends... Okay, let's look at this more closely, because this one's a little tricky. So the first degree is over right here, let's say. Okay? And what I'm going to do is I'm going to jump into a smaller time frame. Let's go into the hourly time frame so we can see a little more detail, because it does get a little tricky with Litecoin here. I'll tell you why, or at least tricky to me. Okay, so I'm seeing this as being clear three waves, okay? Unambiguous three-wave structure. I would say this is the start of my second degree, okay? And it's tough. I've had some issues, some difficulty in making sense of this right here, this price action right there. Not exactly sure, okay? But what I know for sure is this, okay? If I'm taking my Fibonacci retracement tool from the bottom of this right here, let's call it, let's just say here. This is the orthodox bottom of this A wave right here. And let's say this is the top. That's the top right here. We're coming to the 0.5 to the 618. So we're basically playing in the region where you would call this a zigzag. And this would be a three-wave move, a three-wave move, and then an impulse, okay? I think that's what you got right here. It's an ugly, messy looking flat correction. It's an expanded flat correction, but it's still a legal, valid flat correction. So I'd say this is your small a, and then this is your small b. I've looked at this and I've gone back and forth. Again, this is not like 100%, but it's just, you're using probability and doing your best and using rules, right, and guidelines to guide your analysis, to make it make sense. Yeah, you don't just make shit up, unlike what some people think Elliottians do. At least good Elliottians don't just make shit up, right? For instance, if this was, let me just show you something really quickly. So if I think that this right here is a three-wave structure, okay, that goes A, B, C, okay, a flat correction, expanded flat correction, then it can only be valid if this B wave is within 1618 of this three-wave A wave. Does that make sense? So if I take my Fibonacci retracement tool from the top of this A wave to the bottom, it just makes it as being extended pretty much to the sorry, I'm trying to make it catch with precision because it's so close already, basically this B wave expands. If this is a 3-wave move and that's a 3-wave move, this 3-wave move expands to the extreme. And that to me seems unlikely. All right. That's why, okay, that seems unlikely, and I'm uncomfortable with that. So that's why I've always looked at that and said, this is your A wave. Do you see how I did that? That's more than likely your A wave. And this right here is your B wave. I just saw this. It's not, anybody says it's easy is lying, because it doesn't always look like perfect flat corrections and perfect zigzags, right? It sometimes looks a little messy. But I think that's it. I think that's it. My eye just saw that right there. And it's hard to see sometimes while it's forming. But I think that this is your A. This is 3 waves. I think this is telling right here. This spike right here shows me some demarcation that, all right, within this, there's sort of a move, right, that you wouldn't expect in a regular impulsive move, right? So this is 1, 2, 3 for me, ending right here, actually. Okay, so this is my 1, 2, 3, 1, 2, 3. Ooh. 1, 2, 3, and then my pivot, 1, 2, 3, 4, 5, something like this. Okay, close. Maybe there's one leg down. And so what we're gonna do is, I'm seeing as a result of this, so just zooming out for a second, if this was degree number 1, this is the second degree. So Litecoin has just printed 2 degrees, kind of like Bitcoin. Although it took a lot longer to print those 2 degrees, I only see 2 degrees in Litecoin as a result of this analysis, okay? And what I'm going to do now is I'm going to take my Fibonacci retracement from the bottom of this purported small A wave or second degree A wave to the top, okay? And you can see here that you are doing something like a zigzag, right? If this is 3-wave move, your 3-wave move is basing right at the 618 of the prevailing A wave, okay? So that's what I'm seeing for Litecoin. And this gives credence to the idea that this move right here is done, okay? Don't know for sure, but it's likely given that analysis, okay? Obviously you can jump down on small time frame and, you know, kind of look more carefully and closely and see, you know, if you can count 5 waves, all that stuff that we did with Bitcoin. I'm not necessarily going to do that here, but yeah, that's what I'm seeing in Litecoin, okay? Given how we're moving, we're not in impulse. We're still in correction, okay? And the last thing I'm going to say about Litecoin is, if this indeed is, let's say this is our count. I'm just going to throw something out there. If this is our count for Litecoin, I like that. I like this capitulative volume candle right here as being the last. I really like that. Okay, so basically our small time frame consolidation reversal starts there, and this is basically right here 1 degree in the books, and right here is the start of a second degree right here, okay? So that's why that would be my explanation as to the languishing, you know, price action. you're still in small time frame consolidation reversal. But I think, either now or close to now, the next big move is up. But as we can see from the larger analysis of Litecoin, I only see 2 degrees, but it's 2 degrees that took 60 plus days to form. So it's likely that, given that the next big move is up and out, impulsive, right? I can be wrong, but, I'm just, again, doing analysis and using probabilities based off that analysis. Ravane. What I'm going to do is I'm just going to do a cursory look at the number of degrees and then the consolidation reversal on the small time frame, okay? So I'm just going to have a look at the comments, if any comments. Samware says, don't you find it odd that Dodo is totally silent, no social media com or interest, no news? I actually don't follow any news of the assets that I invest in, Samware. So I'm not exactly sure. Rich, hey Rich, still watching all your vids even though little trading right now. Yeah, I'm not trading much at all either. Pretty much just standing pat, adding to my positions and playing a little bit of defense, adding to some margin from time to time. But yeah, I think that's what pros do. Fewer trades, especially at large moments like this, large inflection points. Fewer trades. I'm not trading in and out, trying to catch small moves up and down. It's just doesn't seem wise to me. But yeah, thanks for showing up, Rich. So here on the daily time frame for Ravane, I think we need to be in the log scale just to make sense of it, given the way this asset moves, just to represent the price action faithfully. I've had trouble kind of making sense of these moves and this volume spike right here. But I've admitted as such. This is tough, but if I have to go out on a limb, I would say that this is my initial break of structure right here, okay? And that targets my wave 4 of the previous trend, okay? So if that's my big A, this is my big B, okay? And there you go with your 786 retracement, okay? So that's my first degree right here. And just to prove that to you really quickly, if you can't eyeball it, I do this all the time. So I can tell 786 retracement just by looking. Here you even have a 914 or 886 retracement. So anything between the 786 and the 914 is prime zone for a flat correction, okay? Typically anything between 786 and 914 in my experience, that's your typical flat correction. So that's my first degree right here, ending here, okay? And I think that what you've got in Ravane is two degrees. It's quite simple, except it looks a little more involved, a little more than it actually is. I think you just got this big volume spike in the impulse of the A wave. That's all that is. It's a little misleading. In the beginning, I thought that Ravane had finished its consolidation reversal, right? Because all of this is fractal, right? So you can dive into smaller time frames and see a full 2 degree, 3 degree consolidation reversal in this, and you wouldn't be wrong. It's just that it's always a question of scale. That's there's a lot of challenges to this if you can't tell yet, because it's all fractal. You have to be able to discern what degree are you looking at, right? So it's challenging. But yeah, I see 2 degrees here. And if I go into the smaller time frames, actually let's go into the hourly time frame, specifically looking at our small time frame moves. I think it's quite clear here. We have something like this going on. think this is A, B, and then 1, 2, 3, 4, 5. Okay? I'm not even going to use a tool. So I see 5 waves here. Okay? Sometimes you don't want to overthink it. You don't want to get too into the weeds, but I see 5 waves. It could be wrong, but I see 5 waves. And usually your first instinct is the correct one, especially if you look at these for quite some time. And looking at the consolidation reversal here, I just see 1 degree. I see 1 degree. Okay? Kind of like what I saw in Dodo, I believe. I just see 1 degree. I see an A wave and a B wave. I need another A, at least another A and another B before even beginning to think of a move up and out. Okay? But yeah, 2 degrees and 1 degree respectively on the smaller time frames for Ravane. Hope this is making sense. And guys, if you're getting value, please like, share, and subscribe. Like I said, I don't see anybody else talking about these finer aspects, but very important aspects of Elliott wave theory. I wish people were. I really do. Because I would love for this to become more established and, more minds working on something. The more minds working on something, typically the more progress can be made, right? I can do so much, but I'm sure there's something I'm missing or something I'm not seeing that somebody else, looking at this day in and day out would really, flesh this out and make this more robust, as a theory and as an analytical tool. Okay. So reserve rights, larger time frame. Once again, need to go in log to make this make sense. I'm seeing 2 degrees. Okay. And again, I don't want to overthink it. I think this is 1 wave up, and this is actually a good case for a 5 wave, 3 wave zigzag. Okay, so I see 1, 2, 3, 4, 5, something like that. I don't know how to count this, to be honest, but somewhere here there's 5 waves, and then this is 3 waves. This is a flat correction, and then right here you have 5 waves. Okay, it looks to me like right here you have 5 waves, like 1, 2, 3, 4, 5, something like that. Okay. And then if I take my Fibonacci retracement tool from the bottom of this to the top of that, and lo and behold, surprise, surprise, those 3 waves right here are dancing or hugging the 618. All right, so that would give you, another reason to support the idea that this is a zigzag 5-3. 5 waves up and the 3 waves down, so you can expect 5 waves up to get up and out. Now, given that the large time frame analysis shows that you have 2 degrees in your large time frame consolidation reversal, is the next 5 waves going to be impulsive, fully impulsive, or is there going to be a retracement subsequent to that 5 waves? I don't know. That's the short answer, but I think it's likely, given the analysis, that the next move is up regardless, okay? It's up regardless in 5 waves, all right? So that's what I'm seeing for reserve rights, and that's why I think that this is very strong support, right? Right here, very strong support. You've seen it here, here, and here. It's likely that you see it again. Unlikely that we break that support level. Unlikely, not impossible, but unlikely, okay? Last but not least, we have Telcoin, all right? And what we're going to do with Telcoin is we're going to zoom out a bit. We're going to stay on log to faithfully represent this price action. And much like what we saw in Kadena, we see here, okay? We see a 5-wave structure, right? I think you can all see that. 1, 2, 3, 4, 5. Okay, so 5 waves up, and then 1, 2, 3 waves down. Okay, so this is your full cycle, and then your cycle resumes. 5 waves up, 3 waves down. Let's confirm it, taking our Fibonacci retracement tool from the bottom of the 5 waves, which would be here. Where is it? Right here. Catch. Okay, here we go. Bottom of the 5 waves to the top of the 5 waves. You can see that we are in the golden pocket between the 0.5 and the 618, okay? And that in our 5-wave move down, we can count some semblance of 5 waves, okay? So I think the impulse starts here, okay? A wave, B wave right here, and then it goes 1, 2. I think this is clearly wave 3 right here, and this complex correction is wave 4, and then all this stuff is wave 5, and wave 5 ends right here, okay? And I'm going to give you 2 reasons for why wave 5 ends where I said it did. Okay, first reason, don't overcomplicate things. Use your volume. You have a big spike in volume. That's a capitulative volume candle. If you see capitulative volume anywhere near where you think wave 5 ends, it's likely that the trend is over. Okay? That's number 1. Number 2, you see this huge spike, which would be called an automatic rally or automatic reaction in Wyckoff terms, or what I tend to call on this channel an initial break of structure, basically signifying the end of the trend and the break of the downtrend. Okay, that's the first signal that you're beginning your consolidation reversal pattern in earnest. Okay, so that is where I would, let's not do that again. Okay, that's where I would begin to draw my channel. Okay, and I've mentioned this before, but Telcoin is a little weak in the sense that it's been sold off quite quite a lot, okay? And so instead of staying within the channel or hanging out in the middle of the channel, it's basically found support right below the channel, and that's not unseen. We know that happens sometimes, and that's fine. For low cap projects, that's okay. That's kind of something that you expect. Okay, but here, just with respect to our degrees of consolidation reversal, I think this is clearly your A wave, right? And then all this mess is clearly your B wave. Okay, so that's your first degree. And then here, I think it's unambiguous. You have your second degree. So 2 degrees in Telcoin, okay, on the large time frames. Okay, so that is sufficient to lead to an that's sufficient to lead to a breakout with a sign of strength at the top of the channel, and then a breakout, right? That's sufficient. But we can, as I've been saying, have subsequent degrees of this consolidation reversal. But I think given how it's been hanging out at the bottom of the channel, right? The selling is exhausted. There's no need for further basing, because the whole purpose of the basing fundamentally is to exhaust selling. And I think that's exactly what you've gotten here. Selling exhausted. Buying, selling, exhausted. And this is the low that's been agreed upon by the market right there. Okay? So that's what I'm seeing with Telcoin. And that's why I think that's my case for why reversal is likely for the next big move in Telcoin. Zooming in on the smaller time frames. All right, let's get rid of this channel. Zooming in, zooming in, zooming in. I see five waves. Right? I see the top of wave 4 being here. Okay? I see that's wave 1. Maybe wave 2 is... Sorry. Let me redo that. Okay, I see the top of wave 4 here. Wave 1 goes here. Wave 2 goes here. I think wave 3 is down here. Wave 4 is over here. And wave 5 is over here. It's kind of like an ending diagonal. Not kind of. I think this is an ending diagonal. It looks diagonal to me. And wave 4 is in the region of wave 2, or close to the region of wave 2, right? So you have an ending diagonal. You tend to see ending diagonals in wave 5, okay? And so I think this is where you're seeing it here, but it's also wave C. Yeah, this is wave C. So yeah, you don't tend to see, but it's wave 5. It's wave 5, right? It's wave 5 of this impulse. Anyway, this is an ending diagonal, okay? So it ends the it ends this whole impulse down. So okay, that's fine. And I think we have our capitulative volume candle over here, okay, signifying that. Going into the smaller time frames, having a look at if any consolidation reversal is going on. It looks like this right here, let's see. Huh. Trying to make sense of this. I would say this just put in, it might still be in the first degree, or it might just have finished 1 degree. I think this is your A wave, this is your B wave right here. I think it's on the 2nd degree right here. Okay? So this is what I'm seeing. And I think, yeah, I would say wave 5 is more specifically over here. Right there. So I'd say, boom, that's A, this is B, and then you're coming in for the small a right here. So yeah, I see these kind of in the same space. So that's my analysis. That is my case for a reversal in the near future. I'm going to check the comments now to see if anybody has any other assets you want me to look at. Could you have a look at my dear Dodo, please, Samware? Yeah, I did look at Dodo. Just rewind. You should be able to see. I'm pretty sure I looked at Dodo. Didn't I look at Dodo? Did I not look at Dodo? Maybe I didn't. Maybe I'm like making stuff up. Okay, I'm sorry if I didn't. Let's look at it really quickly. If I didn't. I could have sworn I did, though. I just see 1 degree here. 2 degrees. This is 3rd degree. I think you're on the 3rd degree. So Dodo is even more than likely to go up and out from here, because I think this right here is the 3rd degree of your consolidation reversal. Let's jump down into smaller time frames. And let's see. Okay. I'd say this is very clear. Oh yeah, I'm almost positive I looked at this, right? This is your A wave, this is your B wave, right? Right here. If you're not seeing what I'm seeing, your A wave right here. Actually, this is the 3rd degree, so let's call it alpha. And I think this is right here, 5 waves down. Let's see, 1, 2, 3, 4, 5. Again, you're dealing with an ending diagonal here in wave C, which is not something you see every day, but it is what it is. This is what I see. Okay, so I see 5 waves. I count 5 waves, and I see a 3-wave pattern for beta right here. Okay, so again, this is the 3rd degree. And let's take the Fibonacci retracement from the beginning, from the bottom to the top, and surprise, surprise, this three-wave structure has found support on the 618 of this three-wave structure. Okay, so you have your alpha, you have your beta. That's my case for reversal right here. And because this is the third degree, right? And please notice the specificity or the level of detail that goes into this analysis. I know there are a lot of analysts on YouTube that, analyze crypto. A lot of people, saying, oh, we're so bullish, and you're looking at on-chain data or whatever. There's a lot of different styles, and it's not great. There's no good or bad. I don't think, obviously some people are not that good at, what they pretend to do. But my point in saying this is that just strictly looking at technical analysis, this is my case for reversal. Okay, not looking at any extraneous, exogenous factors, just looking at price action. This is my case, right? Using math, using probabilities, looking at how the price is going up and down, and using natural patterns to make sense of it. So that's my take on Dodo. Now, smaller time frame, jumping in to the hourly. That screams I'm starting the second degree. Okay, that's degree number 1. This is degree number 2. Actually, this might be, because sometimes that second degree is much smaller than the first degree. That may be completing the second degree. Okay, we will have to jump into even smaller time frames. Either one of two things: the second degree is finished, or this is the A wave of the second degree. Okay, then you can expect one more move down before a likely move up. Okay, so that's Dodo. That's pretty much it. That's what I wanted to share. I hope that was helpful. I hope that was useful. Guys, please like, share, and subscribe if you're not already subscribed. If you got value from this kind of analysis, if you learned something, would love to hear your thoughts. Yeah, that's pretty much all I have for today. Have a great rest of your, what day is it today? Tuesday. And yeah, soon, my friends, very soon. You've been patient. You're still here. I mean, you're one of the very, very few people that are taking this seriously. A lot of people. You're welcome, MM. A lot of people are into crypto, and they're kind of doing it casually. They're not putting effort into actually learning about how to speculate, and that's fine. It's not for everybody, because it's kind of a full-time job, and it takes a lot of effort to actually get good at this stuff, to make heads or tails of what price action does. So most people are probably better served just dollar cost averaging. But if you're gonna learn it, and you show up and you take advantage of free resources like this one, just some guy on the internet who finds joy in sharing his analysis, and pretty much has a public trading journal. I make mistakes, but you can learn a lot from even all the times I fuck up, and you're doing that, you're definitely going to make it. It's not a question of if, it's a question of when. So yeah, pat on the back to you, congratulations to you, and you'll soon reap huge rewards for not just trying to learn about technical analysis, but just paying attention to the market, right? Especially at times like these, right? Because once we start running, it's not as easy as people think. Oh, I'll just start investing when it starts going. Like, sometimes you can't even have you ever tried to buy when the price is running? Sometimes the exchange won't allow it because the price at which you want to buy is changing so rapidly that it's hard to get in that bid, right? Or the exchange shuts down, right? We've seen it all. So, like, if you've been paying attention and layering in or laddering into your orders and, building your positions, kudos. You're going to make it. I just hope you do good things with your money. You don't ruin yourself. You don't fall into depression, because a lot of people do. Remember that. It's not about how much money you have, but it's about what you do with it and how you can use it to positively affect your life and the lives of those around you, right? So obviously you guys are probably already know that. All right, that's it for me. Take care. Bye.